Hello, everyone. Welcome to Wall Street from Main Street podcast. My name is Mo Dawood, and today is a returning guest, Fabian Calvo from Fabian for Liberty. Fabian, thank you for coming back.
Hey, Mo, thanks for having me on.
I want to start off this podcast by talking about what's going on in Europe, specifically what's going on with Britain and the EU. There's a lot of talk about Britain may or may not leave the European Union or for numerous reasons. I just want to ask you to give us a breakdown. What is happening? Why would Britain entertain the idea of leaving the EU?
Oh, that's a great question. You know, people hear about the EU, Mo, and by the way, thanks for having me on. It's always great to be on Wall Street for Main Street. You know, people hear about the EU, I think really don't really understand what the EU is. And really, the EU, first off, has 4 different presidents. They have dozens upon dozens of ministries and councils and boards, and they're pretty much all unelected bureaucrats, right? All unelected, and in many cases end up writing over half of the laws that we see taking place in several different countries that are in the EU. So it's amazing. I mean, for example, the EU has a parliament, Mo, a parliament that its parliamentary members, they cannot introduce new legislation. They can't write new laws and introduce those laws. It doesn't work, for example, like British Parliament or like the U.S. Congress. So it's absolute insanity. And I think what people are beginning to see, for example, in the UK, is that it's a experiment that has absolutely failed. And that's why we saw just a year ago or so, the vote in Scotland to separate from UK. That's why we're seeing now the UK wanting to leave the EU. That's why we're seeing countries beginning to this rise of nationalism, if you will, where they're saying to themselves, God, you know, I think we're much better if we have a country that is more protective of its borders, more protective of its culture, and really more protective of its economy instead of this globalization that we've seen that I believe has been a failed experiment. So June 23rd, we have the vote, Mo, and I as much as I would love to see the UK leave the EU because I think it would be best for the people in that country, I think it'd be best for their economy. I unfortunately think it won't happen because, you know, my personal opinion, I have no proof of this, my personal opinion is that vote will be rigged.
Yeah, and I think the people that want to stay in the EU are usually the people that's looking out for the special interests and the crony capitalists because the EU gives them a big advantage of moving product and people and currency around a lot easier rather than being away from the EU.
Sure, and it's also people, for example, like on pensions. It's the same exact scare tactic that we saw, for example, when the bailouts began to happen in 2008 in the United States. You had the banks, in essence, AIG is going belly up, and the government is telling Americans, look, if we don't bail out these institutions, then grandma and grandpa are going to lose their savings account. They're going to lose their Social Security account. So they scare people into thinking, wow, if I leave the EU, if I vote to leave the EU, my pension is at risk. And so people, look, I remember, Mo, when I ran for public office in 2010, I knocked on a lot of doors, like literally thousands of doors over the course of a year. And I can't tell you how many baby boomers and senior citizens literally told me, I really don't care what happens as long as they don't touch my Social Security. And this actually, you could expand on this. And as you know, Mo, we have this Bilderberg conference taking place in Dresden, Germany, where one of the main topics being discussed is this idea of what they're calling the precariat, a term that was coined by an English economist, which in essence includes pensioners, middle-class, disenfranchised individuals whose wages aren't going up, people who aren't seeing opportunity anymore, and, this whole group of individuals. And the elites, if you will, are saying to themselves, look, we have to do something about this because these individuals are typically the ones who start revolutions, who give to the rise of nationalism. And quite frankly, I think they're freaked out about it.
And that's a problem with a lot of the baby boomers. Well, no offense to the baby boomers, but a lot of them have that thinking is you do whatever you want, government, but just don't touch my stuff. And that's very dangerous because you give them a lot of flexibility and to do whatever they want, take away your freedom, increase your taxes, change the rule, increase regulation, etc. So that's a very dangerous line of thinking there.
Yeah, you're absolutely right, Mo. It is it really is, and it's an unfortunate situation. But again, it's how government ends up controlling the masses. We've seen just over the last week or so, in some places 2 weeks, where, for example, EBT cards have not been working, and there's videos you can see. I mean, Drudge had one up there. Several other news agencies are on YouTube of individuals literally throwing temper tantrums, destroying stores, getting all freaked out because their EBT card isn't working out. Now, as a globalist elite, I see those videos, and that's exactly what I want to see happen. I want dependence on government. I don't want dependence on the individual. I don't want people to think, you know what, I can do this myself. No, I want people to say, I need government. I need people to take care of me. I need government spending, or I'm not going to be able to make it. And that's why, when we see this sense of populism, for example, in U.S. elections today, we see it on one side, Donald Trump, and then we see it on the other side, Bernie Sanders and now Hillary Clinton picking up a lot of his talking points, saying, look, we need to have more government spending, more stimulus. We need to have free education and universal health care and a $15 minimum wage. It's all literal insanity.
Yeah, and it just just to get people more dependent on the government for everything now, which is not a good thing, and that's what the globalists want right now, more people to get more dependent on the system.
Right.
So what does this mean for the euro if the UK may or may not leave the EU? Would that have any effect on the currency?
I don't. I think if it has an effect on the currency, it'll likely be more the British pound short term. The UK is not a euro, does not use the euro. What I think how it affects the euro and affects the EU more significantly is how you'll have potential copycats that say to themselves, you know what, if it's successful, if the UK does leave, and if they show in the 6 months to a year that all these lies, that their economy will collapse and it'll be a total disaster, if those are proven to not take place, which I believe that they won't, I think that then you'll have other countries likely copycat.
Yeah, I agree. Not like the euro hasn't had any problem without the problem with the Britain leaving the EU. A lot of the countries that using the euro are having a lot of debt problem, higher unemployment, and etc. So,
right.
Regardless of what's happening in Britain, the EU and the euro have other problems that they need to look at.
Yes.
So I want to talk about what's going on here in our homeland, the United States. As you may know, the job report that came out was very bad. We had the fewest new job added since for the past 6 years. The GDP growth is still dismal at between 1% and 2%, and mostly the GDP is stimulated by all the debt that the government has been adding into the economy. So I just want to get your thought. Does this have the same feeling as 2008, right before everything fell apart?
Yeah, I think it certainly does have the same feeling, and also I would note that we're beginning to see, for example, George Soros. There was a piece about him in the Wall Street Journal a few days ago where he's buying gold, he's buying miners, and he's taking pretty much bets in preparation for some kind of crisis, whether it's in the EU or the United States. And the reason, you say to yourself, as an investor, why would people telegraph what they're doing while they're doing it? Well, the reason he does it, Mo, is because he's looking for a dogpile effect where other investors and wealthy will follow suit. You look at someone like Sam Zell, big apartment guy, big, huge real estate mogul. He's on record, who, by the way, as we talked about pre-interview, timed the market perfectly in 2007, 2008. He's now selling as well. So there's certainly signs that the real wealthy are beginning to prepare for something. Now, I think that we look at where the real estate market is today, we look at where the stock market is today, and we certainly have hyper bubbles where profits to earning ratios are completely sky high. The real estate market's being fueled by 0% interest rate money that big hedge funds are able to get access to and go on shopping sprees. Capital that's coming in from China that in essence is coming from the People's Bank of China. So all of these different effects, Mo, that are all manipulated, they're all artificial demand in both the stock market and in the real estate market that are making these hyper bubbles continue to expand. And I think that, ultimately, obviously, it doesn't end well. I think personally, as far as a timing component, I think the same individuals that are creating these phony, fraudulent, you could argue, bubbles are people that are in the bag for someone like Hillary Clinton. And so they don't want this to collapse prior to her getting elected, because if the wheels come off the bus after the election and she's already in, they can definitely count on her for trillions of dollars in stimulus.
Yeah, I noticed that every time we come close to a presidential election, the Federal Reserve tried to do its best to try to hold the stock market and the economy up as much as possible until someone gets elected, and then whatever happens afterwards, it's too late because the person got elected.
That's exactly right.
So yeah, it'll be interesting to see what happens with the next few months, but I think something could happen after the election. I agree with you there. We'll see what happens with this election. It's becoming very entertaining for the past couple of years, although it's been a very long presidential cycle. I can't go a whole day without hearing Clinton or Trump name anywhere on the internet or on TV right now.
Yeah, no, absolutely. It's totally insane.
So let's go back and talk about the stock market. Right now, it's holding up pretty well. A lot of people were concerned from last summer that the stock market was about to blow up because the Federal Reserve raised the interest rate just a little bit, not too much, compared to what they did in the 1970s when they raised interest rate a lot in an effort to cool down the inflation. So I want to get your thought. Is the stock market at the mercy of the Federal Reserve? Are they the only thing preventing the stock market from crashing right now?
Well, look, I think what's preventing – yeah, I mean, look, you have the plunge protection team in there. You have a stock market that literally was over 18,000 just a few days ago again. Mo, in spite of one of the worst job numbers reports that has taken place in some time. Now, it's amazing that this is the level of insanity, where the stock market goes up when bad economic data is released. Now, why is that happening? It's because the worse the economic data, then we know the Fed isn't going to raise rates. And so the people that are, again, borrowing money to buy stocks, or they're buying up companies that are buying their own stock using this real cheap money, it's why we keep seeing these insane valuations on Wall Street, and that's why we keep seeing the bubble in stock prices continue to go up and up. Again, I think we're going to see a Dow at 20,000. I know people think that's insane, but it's not so much. It's not. I want to stress, it's not that it's like this free market demand and it's this bullish market. It's just the opposite. It's the vast amount of money that's being printed, this money supply that's increasing, that is directly going into equities and to a smaller extent going into real estate.
Yeah, and to be honest, the number that the government put out is not really for people on Main Street to get a good gauge of what's going on in the economy. The government data, like the unemployment and the GDP growth, it's a political thing for them to show that, I lowered unemployment rate, even though if you look at the real unemployment, it's still pretty high. Look at the GDP growth, is still going up, even though majority of it is debt. I think the government economic data is there to help them out, to make them look good, to get elected. Yeah,
no doubt.
And also, it's very manipulated, too, especially the unemployment numbers. If you look at the labor participation rate, it's at an all-time low right now. So that's a good gauge to tell you what's going on in the economy.
Yeah.
Rather than the unemployment numbers.
Agreed.
So I also want to talk about what's going on in the South American countries. it's getting a little bit more headlined in the mainstream media, although not enough in relation to what's going on in the presidential cycle, because a lot of them are pushing out uh, socialism agendas, especially Bernie Sanders and Hillary Clinton. Donald Trump, he's doing it a little bit, but not as bad as Bernie Sanders. So if you look at what's going on in Venezuela and Brazil, where they have hyperinflation, Brazil inflation is already at 10%, high unemployment, government corruption, and also food shortages. In Venezuela right now, they don't have any toilet paper, and like a hamburger costs like $700 right now. So how do you think that's going to play out in Venezuela and Brazil?
Well, it's going to obviously play out horribly. It likely lead to some kind of revolution, or these are the things that lead to revolution. These are the things that lead to. We've seen this before in Weimar. It led to the rise of fascism, and you could say that here in America, it's leading to the rise of Donald Trump. But we see the rise of nationalism taking place everywhere because this class of disenfranchised electorate is growing larger. So that's the first thing. The second thing is that with Venezuela, it's interesting. I remember about a week or two ago, Bernie Sanders asked about Venezuela and about how socialism has worked out there, and he couldn't give a response. In fact, he didn't want to give a response. Now, Venezuela has largely, under Hugo Chavez, was able to sustain these incredibly just economic destructive policies of socialism because of high oil prices. Well, when oil prices collapse, you see their entire economy collapsing. So it's not, look, if it continues the way it is, and then, for example, in Brazil, where you layer that with massive corruption, it's prime for revolution. Brazil is interesting. We're going to see what happens with the Olympics being held there. I know security is a major concern. But look, those are failed states. Venezuela, for sure, is a failed state. Now, a lot of people say, well, look, that's happening in Venezuela. That's going to happen in America. Well, Venezuela is largely different than America. And quite frankly, so is the Weimar Republic and Argentina, Yugoslavia, Hungary, all these other countries that have seen hyperinflation happen. But the point is, Mo, is that the laws of economics, they're the same everywhere. Now, the larger the country, the larger the economy, like the U.S., just a longer period of time it will take. But it's going to happen. It's going to eventually, there's going to be a crisis and a loss of confidence, not only in the U.S. dollar, but an overall trust of the dollar. The only thing that is almost helping the U.S. at this point is that other places are doing far worse, whether it's the EU or whether it's the major problems going on in China. That's why, for example, wealthy individuals in China are going to buy $250 billion this year in real estate in the United States. And so that's the only thing really helping out the U.S. is the fact that other places are doing worse. But when everything goes bad, then we'll see what happens.
And that's the problem with central planning economics, is that a lot of these oil-dependent countries, they plan things as if the oil price is going to stay high forever. They don't have any contingency plan or don't do any scenario analysis where they say, well, what happens if the oil prices collapse? What should we do? How should we plan for that? They don't do that. They're not very proactive like that.
Right. No, they don't. And, I think because we have a real ignorance in really what it is that what I just said earlier, Mo, which I think these countries, I think the central bankers in the U.S. and for that matter, the IMF and those that are running the EU, they look at all those other scenarios and they say to themselves, yeah, that happened over there, but it can happen here. We're special. The law of economics doesn't apply to us. This time is different. So it's almost like this, it's just the self-delusion really is what we're seeing, where, for example, you have Janet Yellen talking about how, well, now she's not going to raise rates. It's really like this lost in translation Fed doublespeak when you have, you have so many now high net worth individuals, guys that run big hedge funds and investment firms, a majority saying the Fed needs to raise rates or this thing is going to go down in flames. Now, a lot of those, including people like Ray Dalio, who runs Bridgewater and Associates, the largest hedge fund, I believe, in the world, certainly in the United States, is now saying not only do we need to raise rates, but we need to have helicopter money. We need more economic stimulus. We need to allow the Federal Reserve to print trillions of dollars injected directly into banks and have those banks, in essence, lend it out to people so they'll just go on spending sprees. Mo, I can't think of anything more dangerous than something like that. But I think those are the type of measures we're going to see in place prior to this real big next collapse in equities and housing and in the dollar.
Yeah, I've read a few of Ray Dalio's publication. He seems to be a big believer of Keynesian economics, where central planning should be at the forefront. And I think he's saying all this stuff and to try to protect his own wealth rather than what's good for the country, in my opinion. So I'm not a big fan of him, although I do respect his investment accomplishment.
Right. Yeah. Well, no question about it. He's brilliant. And, here's the thing, Mo, is just because somebody disagrees with me doesn't mean that they're idiots or whatever it is it may be. Maybe they could be wrong. I mean, I remember back in 2013, talking about how, hey, maybe these Keynesians are right. Maybe they could spend trillions of dollars and somehow, the leprechaun from Lucky Charms is going to come out and everything's going to magically work out. What do I know? I don't know. All I know is that I root my economic forecasting based in history, based on what we've seen historically work. And also having the opportunity to speak to a few of these billionaires a couple times a year and some other people on Wall Street that I work and do business with. And that kind of forms my economic forecasting. But I should add, because I was asked this the other day, my economic forecasting is based on Austrian economics, not Austria, the country, but where this economic thought and philosophy originated by people like Ludwig von Mises. And it's based on as little government intervention as possible, the idea of saving capital, spending less, investing that capital, not having a central bank manipulate interest rates, but having an interest rate that flows to market demand and supply. And unfortunately, those are things today that have been lost.
Yeah, and I could say the same about people like Warren Buffett, where we all respect him for his accomplishment as an investor and what he's able to provide. But his politics is so out of whack. And at the conflict of interest as well, because he was a big player when they did the bank bailout in 2009, because he had investment in Goldman Sachs.
Right.
Yeah. So let's talk about the real estate market, which is your expertise, other than talking about liberty and Austrian economics. What is your thoughts on the real estate market? Because I was looking at the data before we did the interview, and the median home prices in the United States is at an all-time high, and also the rental prices has gone up year over year at 8%. So what does that mean for people that might want to buy their first home? Should they hold the brake and wait a little bit and continue to rent? Or what should they do?
Well, look, I just had this conversation with a friend of mine who's buying a home, and he's able to I think he's locking in the rate of like 3.5% for 30 years. So if you're looking to buy a home and be in it long term, and you can take advantage of these record low rates, I say go for it. I think you'll never see rates this low, certainly in the next couple decades. So I think that's not a bad idea. Overall, if you're, for example, somebody who's looking to invest in real estate, I get really weary of that. Look, I work with people who invest in real estate. I teach it in seminars, around the world. But my thing, Mo, is that what I've been doing, and like we talked about pre-interview, is that for the last 4 years, I simply buy and then resell that value. I'm not holding on anything other than a few properties that I own, that I've owned for a while. But this idea of buying and fixing and flipping, there's plenty of people that do that. I know a lot of them that do that and do well. But I think with market risks and people and markets being able to really switch on a dime so quickly, I think for me that is too much risk. So I think there's opportunity in the stock market right now. There's certainly going to be major buying opportunities in the crash. But if you're someone who needs financing, when the crash happens, it's going to be much harder to get financing than it is now. So, and rates will be higher. So, those are my thoughts there.
Now, Wells Fargo just announced a new innovative program. I don't think it's innovative because they've been doing it for the past decade, where they're going to give out mortgages with 0 to 3% down payment, which is something they've done for at least a decade now. So it's nothing new. Now, do you think that's a good idea for first-time home buyers to do something like that? Even though the interest rate, like your friend did, it's pretty low, and people want to take advantage of that.
Yeah, it's a good question, Mo, and everybody's different when it comes to something like this. I think that unfortunately the loan is really almost a subprime loan. People with a 580 credit score or more can qualify, and many times those individuals, if they lose their job, there goes the monthly mortgage payment. So I think that if you're able to sustain a healthy, decent income, despite what happens in the economy, that's not a bad opportunity because look, at the end of the day, let's say prices go down 30, 40%, and then you want to buy with that, but you still need to get a loan. Well, your interest rate could be 10, 11, 12%. So the notion of saving money in a collapse isn't really, it may almost be a wash. And you're likely not going to be able to get the loan if you're in that credit score range. So, but yeah, what I think it points to though is look, Bank of America did a 3% 3% money down program. The one that they did it about a year ago. The one that Wells Fargo now rolled out a few weeks ago, it's much easier to qualify. It's a much faster loan approval time process. And this is exactly what I feared would happen, that I've talked about for years now, is that you have a lot of the hedge funds that bought up houses back in the crash. They're now selling them to these financed subprime borrowers. And I think those are the people that are going to get hurt really bad because they're thinking, look, I'll buy the home. Prices are going to keep going up. That's the story they're being told, Mo. And it's unfortunate. It really is unfortunate. And so, look, one of the things that I try to do is try to educate as many people as I can to understanding how this all plays out. Now, I'll quickly note, too, is that people will say, well, they still got to come up with 3% down. Technically, they don't. There's there's seller credits that can be awarded. There's also now, instead of no money down loans, what the federal government did is that they came up with federal funded down payment programs. And those are rolled out by states and by cities where you can go and apply for, in essence, a second mortgage, if you will. That's your down payment. And if you make on-time payments for a period of time, they'll actually waive that you have to even repay that loan. So they're fueling the housing market a little bit different than they did in 2004 to 2007, but the same kind of thing applies.
Yeah, and I feel like this is like 2008 all over again with what you tell me about what the banks and hedge funds are doing. So it's going to be interesting to see what happens for the next few years. Now, another problem that a lot of people in this country are having, especially the college graduate, which about 6 million of them are right now living with their parents due to the lack of job opportunities out there, and they're also working part-time jobs. The standard of living is pretty high across the board in the United States for the most part. What should they do if they're having trouble finding a job? What's your advice to them?
That's a good question, Mo, and I think that the job market is, as we saw from the numbers, is not doing great. Look, I'm somebody that believes, and maybe I'm foolish about this, Mo. Maybe it's not true. But in my heart of hearts, man, I believe that we're still in what I call this golden age of business. You and I have talked about it before, where today, because of the internet, we have people that can earn a living based on what they love to do. Are they going to make money overnight? No, they're not. But they can start building businesses based on whatever passion you have and the amount of eyeballs that you can attract, whether it's a podcast, whether it's a blog, whether it's videos, whether it's a course or product or service that you create. So that's an opportunity that did not exist before. And that's an opportunity that, just like people say, well, I got to get new job skills or I got to go back to college. Well, that's an alternative today is to, hey, what about doing something online? What about building a platform, building an audience? That's one of the things that I tell people and talk to people about all the time. And, some people think, well, I can't do that. Well, the time to try at least is now because the job situation isn't going to get any worse in light of the robots and the automation that continues to take place. I mean, that's not a trend that's going to die. That's like people that, I remember when I've read stories about when email started to work out, people said, well, email's not going to go anywhere because, humans have that primal instinct to actually write letters. Well, those people were seriously wrong. And the same people that say, well, no, we're going to bring back all these jobs back to America. Well, maybe you could bring some of those back, but you're not going to bring all of them back. And the ones that you do bring back, well, likely others, just as many, will be replaced by automation and robots. So that's one of the things that I think people need to do. The other thing I think people need to do is I think they need to cut expenses, save money, and look to invest that money in opportunities that they see take place.
And that's a big word that's going to come up, I think, for the next decade is the war against machines, especially against people on Main Street and the government cracking down on robotics and automation because they are going to take away jobs, especially what's going on with the minimum wage going up. Companies like Wendy's and McDonald's are replacing cashiers with machines where people can just put in their orders and it'll be all automated. So that's the unintended consequences of raising minimum wage. And so that's going to be a lot of pushback from government and people on Main Street on robotics and automation because it will take away jobs, although it's going to present other opportunities as well.
Yeah, no doubt.
So, Fabian, thank you for your time. And if people want to find out more about your work, where can they go?
They can go to FabianForLiberty.com is my website, Fabian4Liberty.com. They could also check out all my social media sites are on there and, different, my YouTube channel, Facebook page. I post videos every week and talking about the subject matter that we talked about today, Mo. So always a pleasure to be on your show as well. Thank you for having me.
Thank you.